There's a screen I've shared just to show you briefly what this is all about. There's a very famous book called Rich Dad, Poor Dad by Robert Kiyosaki. It has sold millions of copies around the world. And I'll encourage you to read it. If you don't have it, you can WhatsApp me and I'll send you a free PDF version. So this game was created by Robert Kiyosaki to help people improve their financial literacy. So the research shows that when there is fun involved in learning, the retention of knowledge is higher. That's why in nursery schools and primary schools, you have a lot of games inbuilt in the curriculum. So in this book, the main premise is something called a cash flow quadrant. So Robert Kiyosaki classifies 4 generic ways in which to earn income. So he has a quadrant. So you have, you can be an employee, okay? And that's where the majority of the global population is. They are employees, okay? When you're an employee, you have a job and you trade your time for money. Then many people transition into self-employment. Now, when you're self-employed, you own a job. Okay, so you are a plumber, you have your small business, you're a doctor, you have your small business, you're a lawyer, you have your small business. Now, the employees and the self-employed people control 5% of the global wealth, yet they make up 95% of the population. So for anyone really hoping to accumulate a lot of wealth, they need to transition into the right-hand side of the quadrant. So you either need to be a business owner, where you own a system which generates money, or you need to be an investor. Now, on the right-hand side, 95% of the wealth is controlled by people who own businesses and who invest capital. And yet they're just 5% of the global population. So what the game tries to do is to teach us and give us the skills of our transition from the left-hand side to the right-hand side. So according to Robert Kiyosaki, many of us who are salary earners were in a so-called rat race. Basically, you earn the salary, you spend it, then you go back the next month, you earn salary, and then you spend it. So the way to get out of the rat race is to build what you call passive income. And you build passive income by investing and creating businesses. So in the book, Robert Kiyosaki also shows what he calls the cash flow patterns. So for someone who is poor, middle class, and rich. So I hope you can see this on your screens. Let me just try to enlarge it. So a poor person, according to Kiyosaki, is not the guy in the village. It is the person who gets his salary and spends it all without investing in any assets. Then for the middle class, which many of us are in, the salary comes in, it buys liabilities like a home, like a car, credit card debts, school loans, and then the money goes out through the expense column. Now, for the rich people, what they do is they build assets which they use to finance their lifestyles. So I'll now just take you through the game, and then we see how it actually works. So let me share a screen of a game, and I'll try and demonstrate how the game works. So this is a cash flow game. So the middle round circle is the slow lane, or what they call the rat race. Then the outer circle is what you will call the first lane. So we have two players. It's myself and Larry. I don't know if anyone has been able to enter money too. So I'll now invite Larry to make a move. So you make a move by rolling the, so Larry first has to choose a dream. So Larry, if you could scroll through the dreams available so that people can see which dreams you are selecting. So one of the dreams, for instance, is yacht racing. So keep scrolling. So as he scrolls, we're able to see the different dreams Larry is. Seems that the internet is poor. Let me just create a room of one person, then I take you through how the game works. Let me create a room called John 2. Password is 2020. Whoever is available can join this room. So I'll begin the game. So I can choose a dream. So for instance, this dream here is probably I want to build a stock market for kids, fund a business, an investment school for young capitalists, teaching them the basics of business, and the school includes a mini stock exchange. And in this dream, I'm an engineer. So in the games, you always choose a profession. So I'm an engineer, my starting salary is $4,900. I have $400 in savings. And that means my starting cash is $400. So the different dreams. So this is another dream of yacht racing. So for purposes of the game, I'll choose this. So if you look at the board, it's saying John's turn. When you're ready, roll the die. Now, if you click on this left-hand side, there's something called a financial statement. I hope you can all see it. So now, a financial statement, I know the accountants in the room might be familiar with it, but some of you may not be. The financial statement shows your income and your expenses, and also your assets and your liabilities. So you remember, my dream was that I was an engineer. So my income, the salary is $4,900. If you go to my expenses, these expenses are auto-generated. They're just assumptions based on that particular profile you've chosen. So I have taxes of $1,050. I have a mortgage payment of $700. I have a car loan payment of $140, a credit card payment of $120, a retail payment of $50, and then other expenses of $1,090. So my total income, in our case, would be salary. It is $4,900. My expenses are $3,150, meaning on a monthly basis, I get to save $1,750. Now, if we look at the assets, so now in this column, I have no assets. You can see that the column down here, I have no assets, but I have some liabilities. So I have a mortgage. A mortgage is basically a home loan. So I've borrowed some money from the bank to pay for a house. I also have a car loan of $7,000. I have some credit card debts of $4,000. Then I have some retail debt of $1,000. Now, the aim of the game, if I scroll up here, you see up here that my total expenses are $3,150. Yeah. So the aim of the game is to perform investments which give me a cash flow, what they call passive income of 3,150. If I'm able to do that, it means I'm able to escape the rat race. It means the investments are working for me and they're able to pay for my what? My expenses. So that's the aim of the game. So at that point, in the literature, it's called you're financially independent. You're no longer depending on the job to meet your what? Your expenses. So the aim of the game is to keep throwing the die so that you are able to get out of the so-called rat race. So you can see on the screen it's saying John's turn. When you are ready, roll the die and take your turn. So they're telling me before you start, review your financial statements, and then you may also use this time to repay liabilities or to borrow money. So these are my financial statements. I have $400 of cash. Now let me try to repay.
Yeah. So I need that go-to person where people can just feel like, you know what? Yeah, I just. So you need family.
Can I request everyone to mute their microphone?
Yes, yeah.
What else?
Can you please mute your microphone?
I think, of course, also health issue.
John, you can mute all of.
I think let me mute everyone. Yeah, so when I try to repay, you see I have $400 of cash, so I can select a liability to repay. For instance, if I select the $1,000, the loan amount is $1,000, that means I don't have enough cash to pay off this loan. Okay, so I cancel that option. So then I'm going to roll the die. So when I roll the die, it lands on a square. It lands on this particular square, and it's telling me to donate to charity. If I donate to charity, I'll be given a chance to roll 1 or 2 die over my next 3 turns. But it's telling me I do not have 10%. Remember, my income is $4,900 and I only have $400. So I pass this opportunity. So then I end this turn. And then I roll the die again. So if you're different players, each one will be taking turns. So now, when I roll the die, I passed a payday, okay? And so I added some savings. So my cash is now 2,150, okay? So when I rolled the die, it landed on a tenant who failed to pay rent for 2 months and then skips town. So insurance covers most damage and costs, but you are still out of pocket $500. So I have to pay $500 if you own any rental property. But I don't have any rental property. So I now have $2,000. Now I can choose to repay some of the loans I have. So I'll go and repay. So I'll select $1,000, then I pay it off. So part of trying to get out of the rat race is reducing your loans, your liabilities, by using some of the cash you've saved to pay down the loans, but then also to acquire assets. So the game proceeds. I roll again. So I have 2,950 of cash. Okay. So the strategy I'm using is try and reduce my debt and hopefully reduce my interest payments. So I'll select part of the credit card, but it tells me I do not have enough cash to pay off this loan. So I have to proceed. So I'll roll the die again. So it has landed on an expense, so I have to go for dinner of $80. So I have to pay that money, which reduces my cash balance. As you can see, I don't have any passive income yet, so I'm still in the rat race. So I need to keep playing until I land on an investment opportunity. So I have to keep rolling the die until I'm able to make some investments. The internet is a bit slow. So let me roll the die again. So it has landed on a deal opportunity. So these are my financial statements now. So I have cash of $4,670, okay, which I can use to pay off the credit card, which will reduce my credit card payment and reduce the expenses, which are eating my. So let me look for a small deal. So you can have a small deal or a big deal. So if I click on small deal, we shall see what kind of deal comes up. Just give it a second or two. So this is the investment deal. So it is buying shares in a company called OK For You Drug Company. Okay, they're saying low inflation leads to high share price for this long time maker of medicines. The cost is $40. So that means that's the cost to pay for the shares. The trading range, they trade from $5 to $40. And the cash flow, I mean, they don't give me any cash. But remember, my interest is to get cash. So the question is, would I buy these shares or not? Can someone volunteer if they would buy these shares or not? They cost $40. The trading range is from $5 to $40. So would you buy these shares? Who can give some answers? Who would buy these shares at $40 when they range from $5 to $40? Colin?
I wouldn't. Sorry for the. Buy these shares at 40 when I know that they could. I wouldn't buy these shares at $40 if that is the highest at which they trade. I would rather wait until the price fluctuates to a lower price before I buy. So I wouldn't invest in this.
Does anyone agree with our assessment? Michael?
I think I would agree. You'd want the before you can buy the shares.
Yeah, exactly. So I wouldn't buy the shares because they're already very expensive and they don't give me any cash flow. So for this particular investment, I will pass. So let me see if I can repay off some of my loans. So I have $4,000 in cash. I have a credit card of $4,000. So if I pay off this credit card, it will reduce my expenses. So you see, I've paid the credit card, and what has happened is that my total expenses have reduced to $2,980. It means that the net cash I keep every month has increased meaning that the total expenses have reduced, meaning that the passive income I need to offset my expenses has also reduced. Now that I've paid off some of the expensive loans, I just now need to focus on finding investment opportunities down the road. So I'll keep playing a few more turns until probably you get the concept. But I'll also encourage you to try it out on your own. It takes some bit of practice to get out of the rat race, but you need to keep playing and playing until you get the hang of it. So I'm waiting for the internet to pick up. So I'm going through all again. So I have a deal. I'll go for a small deal because my cash on hand is small. Now, in reality, for instance, in Uganda, if your income is very small, then it wouldn't be prudent for you to go for a big deal like building rentals, because then you don't have sufficient cash to do such a deal. But you can go for some small deals. Like you can buy some shares, you can invest in unit trusts, you can buy treasury bills, and all you need is 100,000 shillings. So if you have small cash, you can still invest. And as you become more knowledgeable and you accumulate, then you start going for the big deals of buying businesses, buying land, and such things. So I'll go for a smaller deal now. So it is starting a company part-time. The cost is $5,000. The down payment I need is $5,000, but remember my cash is only 670. So I would either need to borrow, which I don't want to do, or I will need to pass on this deal because I don't have the cash. So in this case, I pass. So I'll roll the die again. I've been paid. So my cash on hand is now 2,590. So let me see what kind of deal shows up. So there's a company called MYT4U Electronics. The cost of the shares is $10. They trade between $5 to $30. So the question is, would you buy these shares or not? Can anyone volunteer and answer if they would take up such a deal, if they would buy these shares? Any volunteers?
Yeah, I think I would go for this deal. It's better than the previous deal of $40 per share.
Oh, so you would buy it because the shares are priced lower than the maximum trading range. Is that right?
Yes, that's right.
Okay, so let me buy some shares. Each share cost me $10. Remember, I have $2,000. So I'll buy some shares, maybe 100 shares. So when I buy, it reduces my cash by 1,000, but it's going to increase my asset side by $1,000. So you can see here, my cash has reduced, but now I have 10 shares. I have shares, 100 shares of this company called MYT4. So when these shares appreciate in the future, I'll be able to sell them off and make a profit. So I'll continue playing. So the basic idea of the game is one, to teach you how to develop your own financial statement. Now, I'm not sure at this point in time how many people listening in have a written financial statements for their personal finances. Is there anyone who knows their balance sheet, all their assets, all their liabilities, and they're tracking their income and expenses on a monthly basis? Is there anyone who can share if they're doing that? Is there anyone? Is there anyone who can share if they're doing anything like this? Anyway, the point of the game is to increase your awareness of your finances, and to put in place mechanisms to run your personal finances like a business. So each financial decision you make has an impact. It either reduces your profits or your cash, or it makes you go much into debt, or it increases your assets. Remember, the idea is to build assets which have cash flow, so that your cash flows offset your monthly cost. At that point, you are called financially independent. At that point, you don't have to go to work. You only go to work because you enjoy the work you're doing. So it gives you more flexibility in terms of the kind of job you can do, where you can live, and so on. So the idea is to know your monthly expenses, first of all, then to start creating income streams which offset those expenses. So I've been paid again. My cash is $3,000 now. There's a deal opportunity, a small deal, so I'll take the deal, and then we see what happens. So there's a condo, is basically an apartment. Someone is selling a condo, and you usually see these deals in the papers, where you have houses being foreclosed. Now, these deals, when you don't have cash, you can't really participate, because they may be foreclosing a house for 100 million shillings. You don't have any savings. So it's only the people who have liquid cash who usually participate in such good deals. That's why it's important to build assets, and also liquid assets, especially now around COVID. Because of businesses slowing down, people losing jobs, you're going to see the market being flooded by cheap land, cheap rentals, and you can take a chance to buy some of the things. So the cost is $55,000. The down payment is $5,000. I have the cash flow. Every month I get $160. So when I look at my income statements, I don't have enough cash. So if I had cash, I would have bought this deal, because it gives me some cash flow. So unfortunately, I have to pass on this deal. Now, you can also use debt to leverage your investments. That's why there's a borrow option. So now I'll try to go for another small deal. So a company flounders, massive losses due to tainted drug scandal. All stockholders lose a half of their ownership rights. So it's a reverse split of 1 for 2. So unfortunately, I don't own any shares in OK4U, so I'm not affected by this by this reverse split. So I'll roll a few times, then I'll be able to take some questions of how you can use this to improve, and some practical things you can do to improve the way you manage your finances. So I'll try and do a small deal again. So I have a mutual fund. It's called Grow for Us Fund. The cost is 40. The trading range is 10 to 30. This share is also too expensive, so I wouldn't. So as you can see, I'm still in the rat race. It's only when I'm able to build passive income to offset my expenses that I will now go into in the fast lane. And the game is designed that way, because getting out of the rat race is not easy. It takes a lot of patience. So now I have to incur an expense of $200 for a painting. So if I pay that, so now my cash is building. I can choose to pay off the loans, and I reduce my car loan payment, but I'll try and look for an opportunity to see if we can do some investment. So I have $9,000 and let me try to do a small deal. Now this stock costs $10 and the trading range is $10 to $30. So would I buy this? Would you recommend I buy this or not? Would anyone advise me whether to buy this stock or not? The cost is $10. It trades between $10 to $30. And I don't own any shares in this company. So would I buy this stock or not?
For this one, you can buy. It is similar to M40 something company.
Yes, so for this one, let me buy some shares. I hope everyone is following why I'm buying these shares. So you can buy as many shares as you want, but this is just to demonstrate. So in this
Maybe
case,
like 200.
yeah, you could buy anything.
It's 200. Hello?
Hello? I've already bought, so, so let me look at my financial statements. So my shares have increased, my assets, my cash has reduced. I'm still earning $4,900.
Okay.
So you can see my passive income is still zero. So I need to get a business which gives me what? Some income. So let me see what deals are there. So this share is $20. The trading range is 10 to 30. And remember, I bought it at, I think I bought it at 20. So I cannot sell, but I can buy more. So if I buy some more shares, since I still have the cash, you can buy. So in real life, what it means that on a monthly basis, if you can, you need to set aside some money, which keeps growing, and it is ready to be invested. So that's the whole point. Whenever I go around, I pass a payday and my cash increases. Now the challenge is if you're living hand to mouth, you never accumulate any results. That means you can never invest even in the small deals. So the premise is that you develop a savings habit. You take away a small portion of your income every month, you put it aside. Then when the deals come along, you're able to participate. I don't want to donate at this point. So let me roll the dice. Now, so there's a wedding contribution.
You're not yet donation worthy.
I'm not, I have to donate. It's you can see there's no other option. So there will be wedding contributions,
Okay.
There will be mavugo. That's part of life. There will be a car crash. But because I have cash, I'm able to pay.
Yeah, that's right.
Now, if I didn't have cash, I'll have had to borrow and then go deeper in debt. But still, despite all this, I've not yet accumulated what? Passive income. Now, if this game was based on the Ugandan scenarios, it would have, for instance, unit trust and treasury bills. So I would take my $9,000 in savings and put it in a unit trust. Then it gives me 12% every year as I wait for a good deal, which I can invest in. So I don't know if the idea is beginning to sink in. So I have a well-maintained duplex. A duplex is basically like a rental, okay? The cost is $60,000, okay? My net cash flow, even after borrowings and interest and everything, is $300. The down payment is $6,000. I have $7,900 in cash. The question is, should I invest in this deal or not? Can anyone advise me if I should invest in this deal or not? It's a rental property. It costs $60,000 every month. When I get the rent and pay off the interest in the loans and everything, I remain with $300. My down payment is $6,000. it means I'm going to borrow 54,000 to invest in this deal. The question is, did I make the investment or not? Anyone? So, can anyone volunteer? So I can see Charles. So I wouldn't, because it will sink you into a lot of debt. That's one opinion. That's one opinion. But let me try and buy. And let us review my financial statement. So you can see that by doing this deal, I've increased my passive income by $300. So by making this deal, the net flow into my bank account is $300. So what has happened is that I've increased my business. So you can see there's a liability here in the liabilities. Remember I told you I would borrow 6,000, I would put down 6,000 and then borrow the 54. So what has happened is that my liabilities have gone up by 54,000, but I've gained an asset whose value is 60,000, and my cash flow has increased. So if you look at my income, now I have a real estate business which is giving me $300, and now my passive income, my additional income from that deal is $300. So now I'm beginning to slowly get out of the rat race. Getting out of the rat race doesn't mean that you entirely have no debts. It means that you have debts you can afford, but those debts have been used to purchase an asset which is giving you cash flow. The problem with many of us, we get debts to support our lifestyle. Either go for a vacation or pay school fees or sponsor a wedding. Those are not investments. Those are just expenses. If you want to get out of the rat race, you have to borrow to make investments where the net cash flow is positive. Okay. So if the interest on the loan is 500,000, whatever you're investing in should be giving you more than 500. So that, let's say if I invest in a rental and the tenant gives me 500 and the interest is 300. So when the tenant pays me 500, I remove the 300, pay the bank, and I retain 200. That makes a good business case. So I'd like to stop here. These are the principles behind the game. I would encourage you to play it on your own or with a friend until you learn this. Then once you're proficient in this, I would encourage you to start tracking your finances and then making decisions based on that and thinking through the deal. Don't just do a deal because it is hot. Think through it. What are the cash flows? What is the interest? What am I getting? Then based on that, you will see your finances gradually improving. If you're interested, I'll send you some of the templates I used to track expenses. I have a template. Let me see if I can find it and share it with you. But I'd like to invite any questions at this point as I look for the template. So if there are any questions, I'll be glad to answer them. Yes.
Hi.
Yes, please.
John,
could we type the questions and maybe you can follow the chat?
Okay.
Okay.
Or do people prefer to just maybe speak up?
Whatever is convenient to people.
Hello, John.
Yes, please.
I would want to know exactly, because when you're talking about the shares themselves, how do you determine exactly the range that you're supposed to be buying in? Because of recent, I bought shares in Stanbic
Yes,
through
please.
UAP, but then
Yes.
I wasn't given. I was only told that the share is going for 24 shillings.
Yes. Yes.
There was no range that was able to determine if the deal was a good deal or a deal wasn't good. Because even when you go to Uganda Securities Exchange, they don't give you that option of the range itself as well.
Yeah. Now that range.
So how do I get
that range? Now you're supposed to determine it yourself. So basically, from the historical records, you can see how the share has been performing. But when you look at the financial statements of Stanbic, you'll be able to see usually all these companies have they publish annual reports. So by reading the annual report, you should be able to get a feel of if this business has a future. Okay. So one of the skills you need to develop is also how to interpret financial statements for the business you're buying into. So you need to know Stanbic, okay, how much money did they make, for instance, in 2019, okay? Then in the notes, you will see the strategy for the business going forward. Maybe they will say, we're expanding the branches, we're hiring more people. You can look from the outlook, you can be able to gauge that this is a share which might do well in the future. So that trading range is really an estimate for you, the person making the investment. So before you buy shares, you need to really understand the business you're investing in. Yeah, but no one will tell you that this is the range. It is really a best guess estimate, I would say. Yes, are there any other questions?
Yes, good morning, John and members.
Yes, morning.
Francesca here. I just have two. One is procrastination. From what you have, presented, I think part of the sickness that largely we the working class, have is the issue of procrastination. And it's a really big disease. The heart may be willing, but would it be the body would be willing, but the actual doing is the problem. So I don't know if within how you structure your trainings, part of what you address is also the issues of procrastination. And I think also related to that is I think we are also all made differently. Yes. Some who will not, even if it is the percentage of risk is 0.00, you'll really procrastinate and all of that. And I think to a large extent, probably that also contributes as to why, to a large extent, we remain in the state we are in that position. So I think for me, the ultimate, one of the destination. I'll give an example where, whether year in, year out, you're putting in some money, but just even getting that, making that decision as to where to put that money and invest it so that it starts making money for, members. It drags and takes some good time. Finally, we say, fine, let's fix it as we, we continue, having a discussion and all, but, the discussions just never end. So I hope in the presentation you'll be able to, help us, get out of that shell, because much to have money stuck away because it's not working for you really. Yeah. Then two is on the issue of shares. I don't know, but I have, tried out shares, and I think for the shares to make some economic sense is if you invest some good amount of money. I will give an example. I've tried to buy shares, previously. I bought some in Safaricom, but, like 10 years down the line, when you're selling off your shares, you're getting like 10. double, say, what you put in. And so, you know, what I've tried to ask myself is, what would one have been better off, say, fixing this money, for instance, over this period? You'd get maybe slightly more than even, you know. So I think I understand Brenda's question as to you know, whether at the time of investing, you know, some of these decisions and some of these businesses have done, you know, fairly well, but we also know others which have been hit and have kind of been stuck at that, you know, for a long period of time. So
okay, so let me attempt to answer.
That also would need some guidance, because at some point you could have some money and you invest it in the shares, but at the end of the day, it doesn't really work for you because you've locked up money.
Okay.
John,
Yes, please.
can I ask something?
Yes, please. Go ahead.
Just to add on what Francisca was saying, it's really quite hard once you're trying to do things in a group. I've been in a savings group from my workplace, but trying to, all of you don't have the same mindset, you know. Then trying to get people all same page, that we need to get this money and put it like maybe in a unit trust fund that will generate for us some money. It is very hard. Procrastination is, okay, this one is advice. Shares, the only way I feel like someone could really benefit from it is if you buy, like maybe you put like a certain percentage, like this is going to be like, I'm going to be sending it in a unit trust account all through automatically. And that's one thing John taught me. I'm one person who used not to do that. I would communicate with him on WhatsApp and I tell him, I really need to take a step. It was really hard. So I know every money that is left in my account is just basically what I need to spend, of which I also try as much as possible to keep some. So in the next month, after all my funds have already been disbursed, yeah, I put my I've put like some standing orders, and it keeps going. So what I know is remaining, if I can save on that shares, I've bought quite a number of shares with Omeme right now, and we are projecting also it's going low, given the fact that they have not yet signed up their contract as well.
Sure.
So, but based on what Brenda was saying, you do read, but also your brokers tend to ill-advise people sometimes. So it's upon you yourself to decide after doing an extensive reading and making some inquiries from certain people of how you expect it to go. Because now, Francisca said she bought some shares way back in Safari Telecom. If you have to see in Safaricom, if you have to see like those people who benefited from BAT, Batu, then way back in like over 20 years ago, they bought shares at 1,000. Right now it's at 30,000 shillings each. So, and it's not going any lower, you know? So everything just depends on someone, each and everyone, and the circle around you. If your friends are trying to do something in groups or like a savings group, it is not good for my investments alone, apparently. Because not everyone is going to perceive it the way you're thinking. At least you have some little bit of financial literacy, and these ones are completely different people, and they will not get the same idea that you would try to depict to them. So I advise that procrastination part, it is upon oneself. I think that's all.
Oh, thank you very much. For procrastination, usually we procrastinate because of fear, and fear is usually a manifestation of lack of knowledge. So you're usually afraid of something you don't know. But when you increase your knowledge of something, the fear tends to reduce. It means you can manage the fear more. So if you've never invested in treasury bonds and you keep procrastinating, the idea may be that probably you've never delved deep into what treasury bonds are. So in that case, first you increase your knowledge on the investment you want to do to allay your fears, and you get the information from the right sources, people who are either experts in the field or, because the normal man on the street has no idea what a treasury bond is. So they'll just tell you government is going to steal your money. But if you increase your knowledge on a subject matter, it tends to reduce the fear. Then the other thing, human beings tend to procrastinate. So one thing you can do is to make the decision now to invest next month. And you do that through a standing order. If you have a regular salary, it's very easy. Like on my StanChart app, I've already made the decision up to the end of the year to invest some money. And I've done that by scheduling standing orders every month. So the moment my salary comes in, automatically it is invested in the unit trust, it is sent to UAP, it is sent to Crusade Capital. So the moment I check my account, it's already less by that. So even at work, I've instructed the accountant to remove some money and put it in the circle. So immediately, so the money the company pays me, already I've removed the investment for the circle. So I automate my decision because I know as a human being, I would prefer to use that money to upgrade my car, to buy a new shoe, a new phone. So I try to put in place a system which automates that decision making. And these days with your smartphone, you can easily schedule savings. So you want to be able to pay yourself first, then you start paying rent, school fees, food. Because if you're doing that, then you're working for everybody else. You're working for your landlord, you're working for your children, for your wife, but you're not working for yourself. The only way you work for yourself is by paying yourself first. So the money which comes into you, whether it's even business or what, you need to remove a certain portion and you save it. You save it in a good vehicle. And in Uganda, a simple vehicle is like a unit trust with UAP. It's very simple to do. You can also buy a treasury bond. And the minimum money you need is 100,000. So if in a month you can identify where 100,000 you waste it, you can save that money and begin. The important point is not the amount. The important point is the frequency and the habit you build. So if I save 100K every month religiously, by end of the month I have 1.2, which I could have wasted. If I put that 1.2 in Safaricom, 10 years later it grows by over 10 times. That is 12 million. So you can see the important point is not the amount. So if you're waiting for a big lump sum to save, you're shooting yourself in the foot, because the way the human brain works, it builds a habit in small little steps. So I would encourage you to start. You only need 100,000. Then you gradually improve. Then you acquire knowledge. Once you have knowledge, it eliminates fear. Even with shares, you educate yourself. The resources are there. You can learn how to invest on the USE. You can learn how to read financial statements. I wouldn't advise you to invest in Umeme when you've never read the financial statements of Umeme. You need to understand how Umeme makes money before you invest. So my advice is knowledge, then systems. If you have systems in place to automate the savings habit, then you're likely to, even debt payment, you can automate debt payments. And every month you just pay a small amount, and eventually you will be what? So I want to share, before we end, this tracking template. I can share it with you on email. It is a simple Excel template. So you can see here, I have the inflows, the salary, if you have business and other income, any bonuses. So you said, for instance, if I'm earning my 3 million, So I'll have my 3 million as what? As my salary. Maybe I have like a small business, like a rental somewhere. It's giving me 500,000. It means on a monthly basis, I expect 3.5. So then my expenses, I've broken them down into debt. I've broken it down into loans. So let's say I borrowed some money and every month I'm supposed to pay back 300,000. Okay. So my total debt payments are 300,000. Maybe I have another small loan on the credit card and I pay 50,000. And maybe I took a salary loan to do something. I don't know what. Maybe another 750. So now, out of my 3.5, my debt payments are 1.1. Then I start my expenses. So maybe at home, I have rent. I'm living in a rent of 500. So then you put 500. Shopping, another maybe 300. These are just random numbers, but you will need to do your own analysis. Maybe gas, I use one gas thing. Yaka, maybe I use 50K. Water, another 50K. Fuel to work, maybe another 350,000. So the idea is you go through all your expenses, okay? So my total living expenses are 1.3, meaning my total expenditure is 2.4, okay? So my net cash flow, the formula is already inside, is 1 million. Then in your budget, you should also have your investments. For instance, myself, I have UAP, unit trust. I send some money to UAP, maybe 300,000, okay? Then I have some T-bills, which I invest in monthly. These T-bills, I do it through Crested Capital. Okay, then maybe I have a small business which I'm building. Now, the idea is that the net cash flow must never go below 0. So that means my business is maybe I have like a small shop and I put in 200,000 a month. Now, it means that if you have more, the idea is the budget has to be balanced. So the moment you do this and you realize that your net cash flow is negative, for instance, here you like entertainment and you're always going out, and you calculate and you find that you're spending 500,000. What it means now, you can see that you have a negative cash flow. It means that your lifestyle cannot be supported by your income. And when that happens, the way you bridge that gap is through borrowing. You'll end up borrowing either from your friends or from your bank. And when you borrow, it increases your interest. So as you keep on borrowing, especially to finance a lifestyle, you get deeper and deeper in debt. So this is the budget template which I can send to you, and you can start using. It is quite basic, but it will help. So I don't know if there are any other questions, but I would like to end it here. And thank you all for sparing your time. So a couple of questions, if anyone has any questions or any material they will need. I have so many books I can send to you for your own reading.
Brenda. Hello, John.
Yes, please.
Hello?
Yes, I can hear you.
I, for one, want to know, when you're discussing issue about UAP, like for instance, I am in the umbrella trust fund.
Yes.
When I was looking at it yesterday, about it in terms of instead before I invested in the UAP Umbrella Trust Fund, I looked at the treasury bills themselves.
Yes.
With the treasury bills, of course,
Sorry, the connection is poor.
not access to me.
Maybe
The money that I'll be able to make from UAP was much more than the money that. However, I'm saying I'm in the umbrella trust fund for one.
yes.
Okay.
Yes.
So now in the umbrella trust fund, I can be roughly in a month I can earn about like 30,000 shillings as interest at the moment.
Yes. Yes.
Okay. Now when I was looking at it in terms of the money that I've put, let me say I have put, for instance, I've put like 30 million shillings with UAP.
Yes.
And I'm able to get a person who can be able, I can be able to lend a person the 30 million shillings.
Yes.
I'm able to earn a minimum of about 1 million shillings from that investment. Minimum.
Yes.
Okay. Now, when you look at it in terms of the 1 million shillings against the 250,000 shillings, does it make economic sense for me to leave money with UAP, which I can, instead of reinvesting it with someone else at the moment, is what I would want advice on. And in regard to the treasury bills, I do not understand why they advocate for treasury bills when the rate of interest is too low. Because when you read the treasury bills in Nigeria, they keep on advising that for you to be able to invest in treasury bills, you only need to be able to invest a particular sum on a monthly basis to be able to get money out of it. Is what I would want clarity on, actually.
Oh, okay. That's a good question. So when we are investing, we have to look at two things. It's the return and the risk. So of course, you could easily get much more if you lent that 30 million to someone, but the risk of losing that money is higher compared to the UAP. UAP, your money is more or less guaranteed, your principal. So yeah, it's more, even with the treasury bill, the principal is more or less guaranteed. So as you expand your portfolio and you have probably 100 plus 200, maybe $1 billion shillings, then now you need to allocate your assets in a way that minimizes your return to risk ratio. So basically meaning that you need to have a diversified portfolio of investments. So it wouldn't be prudent to take all your savings and lend it to someone, then the guy defaults, you lose everything. You can create a separate portfolio to do that and you minimize your risk. So the idea is that to have different asset classes with different risks, so that you're able to optimize the return to risk ratio. So treasury bills would be what you would call a safe bet. Then if you want a higher return, you can get some of that capital and allocate it to businesses, money lending, and any other thing which you think you're comfortable with. But the idea is to have a balanced portfolio. You don't want to put all your money and lend it to someone and then it all disappears when the guy is hit by a bus or something. So it's about managing the risk. That's what I would say. And the treasury bills are low interest because they are safe. And there's a 20% withholding tax. That is the basic idea. It's about balancing the risk. So if your appetite for risk is high, then you can lend out all your money. But just know there's a chance that you will lose some of it. So the question is, are you willing to bear that risk in return for the higher return? That would be my generic answer to that scenario. So it's about managing your risk. Manage your risk such that you're not wiped out in case something happens. So don't put all your money in one business and the business fails and you're back to zero totally. So it's about managing risk. That's what I would say. But I can send you some literature on that, on diversification. Yeah. Okay. Thank you everyone for joining us. Yes, please.
Sorry.
Sorry, before you leave, this is Matilda.
Yes, Matilda.
Hi, everyone. John, for me, one of the things that I struggle with the most is budget discipline. So every year I tell myself, okay, now I'm going to track the expenses. I download the app, and maybe a week or so into entering the receipts, I'm like, no, this is too cumbersome. Yeah, like no, I'll just go to the supermarket, pick whatever I need. God damn, did I just spend all that money on shopping groceries for 2 people? So I don't know, like, what tips can you give that are simpler than entering every single receipt
Oh, okay.
in the expense tracker to help you build budget discipline?
Okay, now one of the things you can use, it's a psychological trick. You should try and pay yourself first. If you develop the discipline to pay yourself first, then you really don't need a budget. So if you're earning 3 million and you decide every month I'll save 500K, whatever the case, okay? Then maybe you tell your employer to remove that 500K and save it for you in the pension fund of the company, or you automatically send that 500. You put a standing order every month of that 500 going to an investment fund. Then you'll be much better, and you won't need to track all your expenses, honestly. If you decide a proportion of your income to take away and you stick to that, then you don't have to track all your expenses. It could also work as well. I don't know if that would help. So you make the decision to save before you're paid a proportion of your salary, and whatever happens, that money goes off your bank account. And you put in a standing order in the system. You'll find that by Christmas, you will have saved a lot of money. Rather than getting all your money, you buy Pampers, you buy groceries, then all of it disappears. So somehow your mind adjusts to the new level of income. Our lifestyles always expand to the level of income, or they contract. Like in lockdown, already people are adjusting. We're adjusting to portion beans. And so human beings are designed to adjust to the environment. So if you create artificial scarcity in your paycheck by removing money before it hits your account, naturally you will adjust to that new level of what? Of income. So that is one of the strategies you can use. You pay yourself first, then you spend whatever is left. Then gradually, as you develop discipline, you increase that proportion. So if you start with 500, then maybe next month you add another 50K, so it becomes 500. By the end of the year, you'll find you're saving and close to $1 million. That is one thing you can try.
John, I'd like to add something to your comment.
Yes.
So, Matilda, I have struggled with the same issue.
Yes, Michael.
Of not being able. I adopted a technique that could help. So, on top of just paying yourself first, which is done monthly, another thing I do is track my bank balances. So let's say at the end, you can do this at the end of every week, or you can do it end of 2 weeks. So maybe take your balance, note it down in an Excel sheet similar to the one John has shared, so that you track the expense based on the balance, where you don't have to enter every expense. You don't have to enter shopping, gas, yaka, fuel, and all of that. You just take the balance, take the balance and deduct. That will give you a clear indication of your trend, your expenditure trend. So you can also do the same thing for your incomes. But this habit is going to help you also with your income streams. You want to know how much you're making, less your expenses, to know exactly what your cash flow is, or your liquidity. So that.
Yeah.
All right, thank you guys. I'll try that.
Yeah,
and
but
I'll let you know
yeah,
how it
but
goes.
Matilda,
Thank
just
you.
one thing. How come you're able to brush every morning without anyone chasing you around? And the idea is because it's a habit. Since you are young, you've been what? Brushing with toothpaste every morning. So it's the same thing with the habit. And the habit, the most important thing to build a habit is the routine, the frequency. So you just have to keep doing it over and over again, over and over again, over and over again. At some point, it becomes a second nature. So if you're deliberate about building the habit, it's also possible to create that habit. But then also the motivation to do this thing. You need to understand, why are you doing this? Why are you rationalizing your finances? For me, the biggest incentive is freedom. Freedom for my time and freedom for basically my time. Because when you are working for money, every day you're going to work, you can really spend your entire life stuck in traffic, stuck in jam, stuck in a company you hate, stuck with a boss you despise. But when you get financial freedom and you know you can survive for the next 10 years without an income, it gives you choices. And for me, that's the main incentive to what? To improve my finances. It's freedom. Freedom from being fixed to a job, a locality. For me, that's why I pursue the thing. I want to free my time. And our time is the biggest resource we've been given. So if you free your time, then you give options. Then you can pursue interests you are interested in. So if I know that my freedom is more important, then I don't have to upgrade my phone if it's still working. Because I know if I buy a phone of 2 million, that is a month of my time. I've used a whole month of my salary. I've worked 30 days to buy one phone. And for me, that makes sense. I can't trade 30 days of my time to buy a phone. So if you can also play that psychology with yourself and look at the bigger picture. That's why in the game, you had to choose your dream. So you need to choose a dream which is very compelling, that you will do everything to save a penny, if your dream is to start a business or a charity or get out of debt or build a house, and you really focus on that dream, you'll be able to go through the pain of saving, investing, and all that stuff. So I'd like to thank you guys for showing up. Next time we shall be better organized. It was our first time, there's a learning curve, but I really thank you for joining us today. And all the best. I have your emails, I'll share all these tools with you, and also the book, which that you might go through it. So unless there are any other questions, I would like to leave it at this. Thank you very much.